Yo, what's up, everyone? Welcome back to Mr. Money TV live on Thursday night.
Yo, what's up, everybody? Good evening. Good to see you all again.
Yeah, I'm Peter or Mr. Money,
Yeah,
and
Frankie here in the house.
yeah, so today we're gonna be talking about rate cuts. What's coming?
Yeah, it's
Yeah,
been a while
finally.
since we talk about all these economic, stocks related kind of topics already,
That's right.
right?
That's right. Yeah.
And the reason why we are doing this topic now because on the 17th and 18th of September, it's considered a very, very important date,
Mm-hmm.
not just for the US but also all around the world.
That's
Because
right.
that's the 2 days that the Fed in the US is going to hold their how to call it, their routine meeting. And at the end of the meeting, then the Fed chairman is going to come out and announce whether they are going to do a rate cut or not.
That's right. So today in this episode, we'll be talking about the expected outcome of the FOMC meeting.
Mm,
And not just that, we're also going to discuss some of the economic data that is signaling a potential rate cut and the economy that's happening. And then we're also going to touch this interesting topic because despite the fact that we are talking about rate cut, right, the
mm-hmm.
market has been selling off,
Ah,
right? Hey, you thought interest rate go down, market should go up, but
mm,
so why is it happening like that, right?
mm.
And another one more that we'll kind of touch a little bit is on Nvidia and its Blackwell chips. Nvidia really interesting. They've made
Yeah.
many millionaires. Let's see how much we can touch on that.
Right.
But more importantly, right, we also want to talk about a trading strategy that allows you to hedge your investment portfolio. And probably touch a little bit about the Japanese carry trade, Malaysia market, and so on. Let's see how much can we cover. We have a
Okay.
lot to go for today.
Then
Yeah,
60
so
minutes.
60 minutes.
The countdown starts now.
That's right. So let's start with the first thing.
Right.
For people who are wondering what is FOMC meeting and what is Fed rate cut, right?
Mm.
Maybe we wanna do a very quick introduction of what does it mean first.
Okay, maybe we should even start by giving an introduction of what the hell is a rate cut or a rate
That's
hike
right.
or what the hell is that, right? So basically, uh, the Fed, which is the central bank in the US, one of the major responsibility that they have is to make sure that the currency is stable.
Hmm.
While if a currency is not stable, if today you wake up a loaf of bread is $2 and the next day you wake up a loaf of bread is $10, it's going to be very chaotic to the economy. So the central bank has to do something with the currency, and the way that they do it is by tweaking the interest rate to control the money supply in the market.
That's right.
So if the market supply is too high, then the currency will depreciate. Then the central bank needs to do something to slow down the money supply so that your price can go up again, and vice versa lah.
Mm.
So if you can recall during the pandemic, the Fed has been increasing the interest rate from 0 to 5%. That's very high. And when you do that, right, what's going to happen is that people like you and me, we have a bit of extra money and all that. We tend to want to deposit this money into the bank
Mhm.
because bank is giving you 5% interest rate. Fantastic. I don't need to do anything, right? So the action of putting money into deposit got
Means
one
you have less money in the
correct.
market
The
to spend.
consequence will be you will have less money to spend.
Instead of buying the next iPhone,
Correct.
instead of buying more food, whatever, you would rather choose to put your money in the bank.
But that action shouldn't be too long lah, because when money is in the bank for too long, nobody is spending, the economy is going to slow down, which we start to see that kind of crack
That's right.
in the economy already.
So, interest rate is something very powerful. To give you a brief idea about it, just add on to it, is also the fact that when an interest rate is high, what does it mean is that you do not need to invest in more risky thing. Let's say if you put in FD is already 5%, then
Good
why
enough.
do you want to put it into REITs where
Yep.
it gives you 5 to 6%?
Unless the REIT can give you 7, 8, 9%.
That's right. So what happens is that other things need to be way more riskier. Yeah. So if you guys recall, right, at one point in Malaysia, FD rates, our parents' time, was about 8 to 12% FD rate, right? And then what happens is that your parents will tell you this one thing, right? FD can make you rich, which is true lah during that time lah. But if you think about it, when they bought houses, also the interest rate was about 12%. So it was very expensive for them to buy a house. So your parents will tell you this one thing. Wow, now interest rate so low, buy more house ah. They'll say that one. Yeah, your parents buy house very trigger happy, right? Because during that time they experienced 12%. Yeah. So now the truth is that these two are actually related lah. Yeah, you can't have one without the other lah. So when it's more expensive to give you a loan as a business, you will also likely not take loan to grow a company.
Which is
Yeah.
now.
Yeah, which is now. Yeah,
Yeah.
and you will likely not take money to buy house, and because you not take loan to buy house because interest rate too high. Yeah, or buy car, stuff like that. So finally, also another one last thing is that it affects the economy in the sense of export, right?
Yep.
So if let's say today you are US and your interest rate is very high, it means that the dollar usually will become higher because people will say that, US dollar interest rate is so high, might as well we buy USD
Assets, yeah.
and US assets instead of leaving it in Malaysia. That's why Malaysia,
Yeah.
our
It went all the way down to 480 at one point,
yes,
right?
yeah, our ringgit was
Yeah.
weaker and stuff like that. But this caused a problem to their manufacturer because when they want to export, things become more expensive. Then other countries will be like, hey, like Malaysia, right? Our ringgit is weaker, and then we need to pay more for iPhone, right? Then suddenly it became more expensive, not because they increased their costs, but simply because the value of the currency change, right?
Yep. Correct.
So
Correct.
the currency change is something that affects everything. Now, so then the thing is this: do you think that this meeting will come together with a rate cut? Because I think just to finish the background again, I think 2 years back when the market went too hot, the Fed actually increased the interest rate to cool down the market, to slow down the economy, right?
Yep.
And now they have successfully come to a place that seems like it's slowing down. Yeah. So they've been talking about it could be a sign to actually
Yeah,
reduce
correct.
the interest rate, right? So what do you think will our outcome be?
Okay, so first of all, the US has been wanting to lower down the interest rate for a while because inflation has been coming down quite a bit. I think a couple of weeks back we briefly touched on this topic as well, and I remember I said that the market is expecting a 100% chance that the Fed will lower the interest rate in September, right? It's a very weird statement, but that was the narrative during that time. Now, this time round, especially these 2 weeks, or if you want to move a little bit further, will be since last month and this month. Whenever the US come out with new economic data, there is more evidence to suggest that the US economy is starting to crack. A lot of data coming in to say, oh, this part has been weakened, this part is weakened, consumer sentiment is getting bad, manufacturing, they are not ordering new things, their inventory is also getting lower and all that kind of stuff coming in, which becomes a more solid reason for the Fed to react. Because now you need to do something so that businesses start to churn again, people start to spend again so that the economy can start to run.
Right.
You cannot afford to let the economy to be stagnant. So how to make the economy run? One of the way is to lower down the interest rate so that everyone will start to borrow and spend, or to withdraw from their fixed deposit and spend, right? So when economic data is weaker, I think it increases the chance from that 100% that we talked about the last time. So maybe 120,
110%.
110, 120% chance that the Fed may lower the interest rate on the 17th and 18th of September.
Right. Yeah, definitely. That's what we are seeing right now. We are seeing a lot of economic data slowing down. We are seeing that even the orders are coming in slow and stuff like that. But here's the
Yes.
thing that's really, really interesting, right? As we are talking about reducing interest rate, the basic theory is that when interest rate reduces, stock market is supposed to boom. But this time around, stock market actually went down. People are selling off.
Right.
Hey, isn't that very weird?
Right.
And while the a lot of news has been saying that like, hey, the faster the economy show crack, the faster Feds will reduce the interest rate.
Yep.
That is what we are looking forward to.
Yep.
And now it's showing crack. And then now the whole market panic a bit. So what's actually happening? The people very weird, right?
You may say so, but you can also argue it in a different way. So how to argue this? You need to zoom out a bit.
Okay.
Let's zoom back out to beginning of the year, beginning of 2024. if you can recall, that was the time where people expect that, oh, interest rate has been going up so much already, up to 5% already. I think this year will be the year that the Fed will cut interest rate.
Yep.
So that was the narrative, right? So that expectation has been slowly embedded into everybody's mind since January. Every day tell you this year going to cut maybe 5 times, 3 times, or whatever times, right? So with that expectation, and if you look back, either S&P chart or Nasdaq chart or your Dow Jones chart, since beginning of the year until today, is just one-way street.
Oh yeah.
Right? So people were buying that expectation that this year it is going to cut. Okay, but after every FOMC meeting, the cut didn't come. So people disappointed a bit, market slowed down a bit, but it's okay. After that, run again. Next meeting, disappoint a bit. Okay, never mind, run again, right? But this time around, because the chance of the rate cut is so strong, then I think there's a little bit of that buy on rumor, sell on fact element there. That is point number one. Point number two is that just now I mentioned these 2 months punya economic data has been really bad. It missed a lot of estimates.
Yep.
When you don't meet market expectation, there's only one thing to do lah, which is to sell lah. That is what fund managers do lah. They try to be as objective as they can when it comes to their investment. So if data say you should sell, you shouldn't put emotion to it. You should follow.
That's right.
So that is probably another reason why stocks have been coming down. So I think these are the 2 main reasons why you see beginning of August, we had a little bit of panic. Early September, also a little bit of panic happening over there.
So if you actually look at it, I'm just looking at the chart right now. 1 year ago, S&P 500 up to today is up by 16.39%.
Oh, that's fantastic.
Despite of a increasing interest environment, right? So what does that tell you is people are quite interesting, right? Despite the fact that interest rate keep going up, they were pricing in a rate cut.
Yep.
Yeah, and now suddenly there's a drop of 1%, close to 2%.
Yep.
And certain companies going to drop even more.
Yep.
And we know that the economic data is showing economy slowdown, which is part of an expectation, right? And it means that company earnings results may not be that beautiful. So people will also feel a little bit jittery. So there's 2 kind of people, right? The kind that panic sell and the kind that is rushing to take profit right now. Because assuming if I'm a fund manager, I've been investing since early of the year. By today, I've already made about 16%.
16%.
Drop by 2%, might as well exit now.
Correct.
Right?
Correct.
Yeah, because for the next 3 months, what we'll be seeing is bad results.
Also, next few months is very volatile. Not just because of interest rate cut and all that. This is also a US election year, So you don't know who's going to win. So when you have uncertainties, right, the best strategy is to stay away. Yeah. So yeah, I forgot to add that. That's probably the third reason why people are away from the market for now.
Yes, that's right. So the whole point now is that the whole market is kind of uncertain, despite the fact that there's rate cut. It seems like market just loves volatility.
Oh yeah, man.
Because that's where you can make money.
Yeah.
So despite the fact that we keep saying that, market is going to get better, get worse, that's not the point. The point is whoever that's going to be in the market wants volatility. Yeah.
Correct.
So
because you put it this way, if the market is all the way up where is the fund manager going to continue to find money to go and continue to buy? Cannot, right? You must have like down moment a bit so that they can take some profit, keep the bullets for a while. Then when it comes down to a certain level, then they can re-enter the market. So if it is just one-way street, then very hard to play.
That's right. Yeah. And if you actually look at economic data, right, there is a laggard behind, right? It's always lagging, right? So when we actually saw the Feds increase the interest rate the last round over the past 2 years, it took quite many months before we see inflation
starts to come down.
Yep. It took close to a year or more before we start seeing production slow down. Right. So real economic data is always lagging behind the policies that are implemented by government and central bank, and therefore it will take a while. That's the point. Yeah.
So now, even though if the Fed really cuts interest rate in September, right, you don't expect the company to straight away make money. Just like what Peter mentioned just now, it will take probably 3, 6, 9, or 12 months for the benefit of a lower interest rate to kick in, and then only you will start seeing all these activities to start to be more active again.
Mm.
Yeah, so probably those time would be a better time for you to re-enter the market if your strategy right now is to stay off and you start selling your shares.
Mm. Now, let's move on to a particular company.
Mm,
Yeah. Before we go to other companies as well.
yeah,
It's actually Nvidia, right? So Nvidia and this Blackwell chip thing, they are actually the market leader in the AI sector, lah. We all know that, right?
yeah.
But recently there has been some concern because of the delay about
Blackwell.
their Blackwell chip, right?
Mm.
Yeah. So what are your thoughts? Do you think investors should be concerned if anyone out there is holding a stock
I
or
think
something like that?
okay, I,
Maybe we shouldn't be giving stock advice.
correct. We,
You know?
we, we are just commenting. We're not giving stock advice. But today Nvidia is the world most valuable company.
Yep.
Right? Everybody look at Nvidia to try to get inspiration what they should do with the rest of the stocks, which is not very rational, but that's the fact, lah.
Mm.
Right? So the fact that one company say that they are going to delay the launch of their chip suddenly also contributed to the panic in the market. So a lot of all these tech stocks they got sell off because Nvidia says that they probably need to delay the launch of Blackwell. I can't remember by 1 month or by 1 quarter. But the moral of the story is they will be delayed lah. And people start speculating that, oh, is it because your clients are not buying? Is it because your technology doesn't fit the market demand right now, so that you choose to delay your production and all that? So yeah, there's a lot of rumors and discussion out there. And if you go and read up all the articles, sometimes you find it just really funny and interesting.
Yeah.
Uh,
It's like without Nvidia, the AI
Correct.
market and the world
Correct.
don't know where to go, right?
Correct.
Yeah.
Yeah. One day without Nvidia news, right, you notice the market tend to be a little bit more quiet one.
Yeah.
And the day Nvidia announce something, oh, the market that day become
Yeah.
very active.
Correct.
Yeah. So
Correct.
that's how the market react today, lah.
Yeah.
But how I see it is that whether they delay or not, that is just business as usual, right? Let Nvidia do the thing that they want to do. I think the fact that we are talking about more Internet of Things, more data centers, and all that, eventually, over the long term, as long as their product is relevant to today's world, I think they will still continue to do relatively okay.
Mm. So here's
Yeah.
where I think I want to highlight a little bit about the investment psychology behind of every trader or even fund houses or whatnot, which I could be wrong and you can add on your comment, right? I mean, try to think of it this way, right? Let's say today we are at the beginning of the AI cycle. We look back, right? We're at the beginning of the AI cycle. AI was an interesting news, and people say, okay, great, let's invest in Nvidia because it is the great company for AI. Now, those people who invested in Nvidia with a lot of money, we are talking about people who are investing, let's say at least 100 million and above, or 50 million and above, lah, right? Or 10 million and above, lah, good enough, right? They, over the past 1 year, they would have, or either past 2 years, because the news has been running for about 2 years, right? Right?
Yep.
Since the ChatGPT is out. So if we look at over the past 1 year alone, Nvidia has gone up 120%.
Wow, double. More than double.
Right? If you're looking, if you have been holding Nvidia since 2023, it was $17, and today is 106. Right? So if you're talking about 2023, $17 somewhere around that you bought it, and today at about 106, you are talking about 500%, right? Is it 500?
Yeah,
Correct, 500, right?
yeah.
500%.
Yeah.
That's a lot of money, you know. Now, so you think about it, right? My 10 million is now 500% is 50 million. Yeah, it's $50 million, right? Today, if Nvidia say, there are a few factors that can happen. Number one, Nvidia say that Blackwell delay. Do you think it makes sense for me just sell at least 10 or 20% to just
of course.
secure my pot?
Yeah, correct.
Right? Okay. Let's say that there's no Nvidia delay lah. Let's just say that after a period of time before this FOMC, now maybe I want to sell 50% just to secure my pot. I may sell it at, let's say today the price was 106, right? If let's say I sold it at 100 lah, 100, okay? Do you think it's a problem?
No, I'll
It's
be
not
happy.
problem. You'll still be happy, right? Because
Yeah.
100% increase, what? Right? So there's this group of people who are like that, right? Now, does it mean that I don't believe in Nvidia? It doesn't mean. It just means that I already make enough money from Nvidia that I don't mind having a little bit lesser.
Mm.
Now, then there's the other group who maybe bought Nvidia just 2024. Your
Mm.
profit is 100% from 10 million to 20 million. Now, for you to sell now, you may feel quite okay still lah, cost 100% ma. But you may not sell 50% because you saw 2023 until today already people make 500, you only make 100.
So psychology lah, behavioral finance.
Right? And then
Mm.
those who actually just started investing in Nvidia, let's say they only invested 500 or 1000 ringgit, they made 30%. How would they feel?
Mm.
Right? And someone else selling 20% of a 50 million pot,
Mm.
you're going to be like, oh no, something's wrong in the company, because those kind of numbers will affect the share price significantly, right?
Mm.
Yeah. And now, for a small fish who just started investing, the chances are, which is most of our retail investor out there, you will be panicking, wondering if the company got problem,
Mm.
right? But on the other hand, for the seasoned investor, like in funds and so on, by now they would sell off to secure certain profit, right?
Yep.
Now, what do you think is in the mind of this fund manager generally? Because that was your job last time.
Mm.
You used to deal with fund managers.
Yep.
And what would be their excuse? They know that this company is still a great company,
Yep.
but they will still sell. So for what reason?
Okay, when fund manager wants to sell, to buy or to sell, they need to write report one, you know. So you cannot just say, oh, today I wake up, I feel like selling, so I sell, right? They must put a reason one. So that what kind of reason? One could be that, like you mentioned just now, they could have made 500% already. Okay, it makes sense to take some profit off the table. It can also be that actually I feel that it can go up another 500%, but but I don't feel comfortable and I don't want to take the risk. So I need to find a reason for me to do that action. So happen that now Blackwell is going to be delayed. I catch the point already. I'm going to use this point to write my report to say I want to sell. So they're going to say, okay, Blackwell is going to be delayed. I think the company is going to be bad. Let me sell 20% of my holdings right now. So those are the kinds of action that could be taken in the market in the past few days that caused Nvidia to go down quite a bit.
So the point there is they are just taking the risk off table,
Yes,
right?
correct. Risk off.
Yeah, but for a retail investor, sometimes you can do that. You may not be able to do that. It all depends on your volume and quantity and stuff like that, right? If let's say you are investing only 100 USD per month kind, I mean honestly, you have a problem lah.
Yeah.
Right? Yeah. So it comes down to how you want to view it and at one point you're seeing. But that is how we talk about overvaluation, right? If you actually look at overvaluation from this perspective,
Yes.
is generally it means that investors are willing to take some risk off the pot. Whether is it because it's overvaluation has nothing to do with the company's future. It just means that the risk and reward right now
doesn't make sense for
make
the manager.
right? It doesn't make sense for
the investor.
The investor
Yeah.
who has already put 10 million and now it's 50 million. And then he tell the boss and say, can you put in another 50 million to buy Nvidia? The boss is gonna be like, hey, you cheating, right? Yeah. So, but you want to have more Nvidia, so you can say that I sell some Nvidia first because of some bad news, say 30% or 20%.
Yep.
Now you keep say 10 million.
Yeah.
And when Nvidia drop, then you buy more Nvidia.
Sometimes it's a trick, especially when you're a big investors. So let's say let's say not 10 million, you are a bigger investor, you are a 100 million investor. So you go 5 times, you become 500, right? So when you have 500 million in your profit, it's okay to take 100 million off the table, correct?
Yeah.
But when you try to sell 100 million worth of Nvidia stock, or you try and see, it probably go down like 10%, 20%, correct?
That's right.
So that's the time where you sell, and then everyone panic, and then they start to follow you to sell also. And then suddenly you realize that, now if the boss asks you, why you never go and buy more Nvidia? Then you can tell boss, okay, now can. Because I took profit already, now I got bullets.
Yeah,
then
you can buy more, right?
Then you can buy more at a much cheaper price.
Right.
So the bigger investor you are, I think you can play with this kind of strategy more effectively.
But isn't this considered market manipulation?
No, I'm not manipulating. I memang need to sell. And after I sold already, it memang become cheap. So I memang have to buy.
So it all comes out to the report they're writing. Are
Correct.
you under a regulatory body, right?
Yeah.
And is your action regulatable, right?
Yes,
Yeah.
yes.
If let's say you are a private guy,
Mm.
you do that, then maybe they will come and knock your door. Lah.
Yeah, correct.
Yeah.
Because like I mentioned, right, every time you buy or you sell, you need to write a report. So make sure if you do such transaction in a short period of time, you have a good justification
Correct,
for it.
correct.
But if let's say it is really a good price to sell and really a good price to buy, then so be it lah.
Correct. That's why for those of you who are wondering, is this market manipulation? Okay, the answer is that it is not because of a few features that were built in from the start.
Yes.
Number one, in order to buy the stock, the fund manager had to write a report on what they believe the price to be.
Correct.
That's number one. So they will only be able to sell when they hit that price,
The
or
target
that
price.
they don't believe that this is gonna happen, right? So it was preset. It was pre-planned. It wasn't on the spot. He tried to play.
Yeah.
Yeah. You can argue that at the day he wake up, he feel a bit more greedy lah. But whatever lah. The point is that humans are not perfect. Systems are not perfect. The system can only do so much. That's number one. Now, compared to a guy who's sitting in the bedroom who did that,
The one harder to argue.
harder argue because you did not wrote a report earlier, and even if you did,
there's no one to check
no one
and
check the
balance.
report, right?
There's no check and balance.
Yeah, there's no one to check the report and so on. You can say it's not fair, which there's some elements of it, but well, there's the system we are in, so there's nothing much we can say, right? But as far as regulatory concern,
True.
so maybe if you don't want to get into that place and you're a very creative person, you should be a fund manager.
But prepare to write a lot of reports.
Yeah, that's right. That's right. Yeah, so it's not illegal.
Yeah,
Okay?
and if your report doesn't justify, then you get into trouble lah.
That's right. Yeah. So I would say that ultimately, right, the action of buy and sell, it's kind of like fire, right? Fire can be used to light up a house. Fire can also be used to burn a house. Just like a knife can be used to cut veggie or either chop someone.
Yep.
It's what you want to do with it. No?
Yep.
Yeah, the rules will be put around it. But, it's just like you stab someone. It can be either considered murder or either self-defense. Right?
True.
So it all depends on how you frame it now, ultimately. Yeah. Yeah, because people I think people feel quite angry if let's say we don't explain this part, right?
Correct.
Now, let's move on to the next thing as we talked about Nvidia already. I think there is one event that happened quite recently, although it's a bit of old news, but I think this is something worth talking about a little bit.
Okay, what is it?
Right, which is the Japan carry trade.
Yes, I made a video of it. Now you all should go and check it out.
Right.
Yes.
Yeah. So go and check out the video about the Japan carry trade. Now, it's really interesting because Japan having a low interest rate and then being taken advantage of in that manner to increase the volume of trade in the market was a common practice.
Yes.
Yeah.
Very common.
Very common. It's so common that it's almost a no-brainer that you should be doing. Right? Even if you don't do, it's kind of like you're not very smart. That's how people would have seen it. Now, today, who has the last laugh? Obviously, those who stubbornly don't want to do it. Right? But the point is, with this new thing implemented where Japan interest rate goes up and carry trade is a no more viable option, how do you think is going to impact the investment market? Will there be less volume? What would you foresee or what do you estimate as some of the effects that it will have in the market?
Okay, some people commented on my video saying that Japan has reversed that decision. But no matter how I cannot find the article. So if if you all see the article, please share with me so that I can update my information as well. But what I read and what I know is that Japan is trying to increase the interest rate so that they can, because they know that in the past they are trying to keep the interest rate zero. It didn't really help. So let's try another strategy. I increase the interest rate, but at the same time, let me perhaps do more infrastructure development. I use this thing called fiscal policy. I use government policies to try to spur the economy so people will spend more instead of trying to use monetary policy to control the interest rate. So if they start to increase the interest rate higher and higher, then for those global fund managers who previously have borrowed cheap Japanese yen because interest rate was zero and by just putting into US FD, which is giving you 5% currently, you make a clean profit of 5% in the past. Now suddenly you need to start paying your interest on your Japanese loan. It starts to make not much sense anymore. So what they will do is they will withdraw the US dollar from the FD, convert it back to yen, and then they will pay back off their debt. So this scenario is being played out currently globally. So you can see yen starts to recover, right? And because of that, all the Asian currency also benefited from it. And Malaysia is part of it as well. So when people withdraw US dollar and to reverse the cover trade, some of the money also being converted into ringgit and bought into Malaysian assets. So KLCI has been doing great, fantastic. I think we are going to test. We may test 1,700 points very soon. Japanese yen is doing very well. Asia market generally is fine, right? At the expense of US dollar and US equities market currently. But
now it's payback time.
Payback time. But we don't know how much is involved in carry trade. There is no official data, so people can only estimate. And in the video that I make, I estimated about $1 trillion. Yeah, what happened if $1 trillion remove, and then what are the consequences there? Yeah.
Yeah. So with $1 million removed, right? What are your thoughts? The question is that since we don't have real data in terms of how much of this carry trade were in equities, how much of it were in bonds, how much of it were in stocks or properties or whatever lah, right? Yeah. We it's very hard for us to really estimate, right? Yeah.
But think of it this way lah. A lot of assets are being priced in US dollar. Right. So so meaning to say maybe there are a lot of Japanese yen that has been converted into US dollar, we don't know. So if they need to repay their Japanese loan, so they need to sell all these US asset, right? So that is the worry. That is the worry.
I am thinking of myself, are there people who actually took Japanese loan and then bought properties?
I wanted to do that. I wanted to do that.
Then what
I
you
was
do?
tempted to, but I don't know when the Japan will start increase the interest rate.
But if
so
you
I
did that
don't
for
dare.
the past 5 years, at least you.
Yeah, then I could have earned 5 years of interest.
Yeah,
I was
right?
tempted, but I didn't dare to.
So, in your opinion, how many people actually do such a thing?
As long as you are global managers, I think to a certain extent you will do it.
I think basically if you are rich enough and you have a family office in global markets,
Correct.
Yeah, the very high chance.
Correct. Very
That's
high.
why the rich get richer.
Correct. Very high. Because it's free money. Why don't you do?
That's right. That's right. Okay, I don't know, has this got to do with Hong Kong, right? So Hong Kong recently had their properties actually went down. A lot of the tycoons had to fire sale their properties. Yeah, and I don't know whether has it got to do with this. Yeah, because Hong Kong is well known as an international hub for money. I'm not surprised when the tycoon actually took loan from Japan. Yeah, and yeah, basically, let's just put it this way, right? All the data is pointing towards not so good actual market moving ahead lah. Yeah, so you have to be prepared to hear bad news. Yeah, I think, but that's the best news that come out of it is interest rate reduce.
Yeah, correct.
Yeah, whatever doesn't go down cannot go up, right? Yeah, and I think the market is also a little bit in that sense where like with interest rates so high also can go up. What happens if
interest rate goes down?
Interest rate go down, but you need to pay back first. You need to pay back first. That will be the question. So how long this payback gonna be? Will be another cycle.
Yeah. But one thing for sure is volatility will be very high during this period of time.
Now
you will see big swings in the market.
That's right. And this leads us to one very interesting question, right? Which is on the point of futures. So recently we have been talking to some banks about futures. Now, what has all this got to do with futures to start off with?
Okay. Yeah. Do you realize we talk about stock investors, but we never use the term futures investors?
That's right. But when you read news, you will very often see the futures drop, the futures go up,
Okay.
stuff like that, right?
Yeah.
And then it affects the stock market.
Correct.
Mm.
Okay. So it's always stock investors, futures traders.
Ah.
So traders, as a trader, your job is to take certain position when the trend shifts. Right. So when the volatility becomes higher, they tend to want to take advantage of this volatility and then they make money out of it. Now, the other point is that because they are futures trader, so technically they think about what the asset price is going to be 3 months, 6 months, 9 months down the road. And they try to predict the price and then they try to price the asset towards there. Therefore, stock investors sometimes use that as a rough indicator to have a feel of what the market is trying to do. Is the market trying to price higher or is the market trying to price lower?
Okay, let's go into this, right? Because a very common news headlines that we will see, okay, which I think many people may not understand, is like they see like S&P 500 futures
drop
3%, right?
Yeah.
And then you see the market, panicking like that. And then you see a sell-off in equity.
Affected the pre-opening of Dow Jones.
That's right. So how do you interpret that news?
Okay. Futures market open longer hours. If I'm not wrong, is 20 hours or 23 hours a day, something like that. They only close for 1 hour, 2 hour only.
To shower.
Correct. But stocks market is fixed time. It's in the US, it will be 9:30 until 4 o'clock, right? So it's only that fixed hour. After that hour, generally, stocks are not trading. So where to find inspiration? You look for something that is trading longer, right? For newer generation, sometimes they even look at Bitcoin to find inspiration because this is trading 24/7. So every single second, if something happens in the economy, Bitcoin can take action first.
Yeah.
In the futures, it's the same because you're trading so long hours. So if anything happens in, let's say, Australia, which is almost midnight already now, if something happened there, futures market can take action first. But stocks need to wait until the next day.
That's right.
So that's why stock sometimes when they trade, they will look for futures market to see where is the direction.
Okay, so let's put a scenario so people can understand this better.
Yeah.
Okay. Let's say tomorrow there's a report that came out. Okay, I'm just gonna give random report and that is not real report simply because I don't want you all quote me. Say that there's this world manufacturing report. That discovers all the order books of manufacturers, right? Which tells you that if the number is dropping, that they have less things to export, they have less buyers, right?
This is bad news.
So let's say it dropped by 10%, So what will you likely see in the futures market?
Straight away drop first.
Straight away you will see future drop first.
Immediately. Then as stock investor, too bad you need to wait until tomorrow 9 o'clock.
Then you're gonna see a sell down in the morning, right?
Correct.
So why will futures drop? Okay, is because for those of you who do not understand, why would future drop is because people are expecting there will be bad earnings result in the next few months. Therefore, S&P will likely go down in their estimation. Therefore, futures price goes down. That's the idea behind. Now, and the stock investor will wake up in the morning and look at this data and say, oh no, people are expecting S&P to go down. So, what's happening? Then they go and read. They say, since people are expecting already, let's be safe a bit. Since I already make 200 or 300%, maybe I should sell 30% first. That's the idea behind. Right? Yeah, so I hope it helps you to understand future. Now, with this in mind, right, with FOMC giving a rate cut, with bad economic data coming out, what are some of the commodities or futures and that you foresee will have volatility?
Okay. People always relate currency and gold together. So when you talk about interest rate cut, interest rate high, and all those things, right? For me, at least, the first thing that I look at is gold, right? And not only gold, but to look at gold futures to find what is the impact from the current spot price. So the current spot price of gold is about $2,005. I didn't look at the futures market, so I'm not very sure. But my suspicious is it's going to be higher than the spot price. Simply because your expectation is for the US to cut interest rate. And if the spot is already at 2005, I think the futures is going to price it even higher with the expectation that more rate cuts may come. And if more rate cuts happen, gold is going to be more valuable. Right. So that's how I see it. And it is going to be the same for any other asset that that is going to be impacted by by this interest rate cut as well. Now, the other reason why the US is going to cut interest rate, we already discussed, is that maybe the US economy is not doing very well. When economy not doing very well, maybe we don't need to use so much oil and gas. We don't need so much transportation. We don't need to do so much of plastics and stuff like that. So when you don't need so much of oil price could possibly go down. So again, I didn't look at the oil and gas futures price just now, but my suspicious is that if you compare that oil futures price to the spot price, it's going to be lower than the current $70 over dollars. Maybe we can do a quick check right now, but I really have no idea over there. Yeah.
Yeah.
Wait, let me just
Crude futures settled down by more than 1 billion demand sphere.
Let me just do a quick check. Okay. Gold futures price is 2553. Let me look at what is the stock price, the spot price right now. Spot gold is only 2521. Yeah. So the futures market expect gold price to be higher than the current price.
That's right. Yeah.
Yeah.
So it gives you an indication.
An indication. It's just an indication. Futures market can be wrong one, I tell you.
Hey, it is not. It is not.
Yeah.
Yeah. If they are always correct, they are gods.
Correct. Futures market is just an indicator for you to estimate.
Okay. So I want to highlight this one thing, right?
Yeah.
So the other day, I had the opportunity to speak to the head of derivatives in AHIP, right?
Affin Huang Investment Bank.
Yes, Affin Huang Investment Bank. With Calvin. Yeah. It was a very good conversation. Yeah. We talked about futures. A particular topic that I always think about futures, I would think about trading, right? So then one of the things that when I researched more about it and a conversation with him was that futures actually is pretty good when it comes to hedging. Yeah. So what does it mean by that is that if let's say you are expecting the stocks to go up in price, but you're also a little bit concerned, right? You want to cover your base a little bit. You can always set aside a little bit for futures, right? To hedge your portfolio. Why is it so? Is because futures has a leveraging element. So what happened is that assuming just throwing random numbers again, it's not real, not based on contract price. Okay. Let's say today you want to set aside 30% of your portfolio to hedge against the market. But 30% is a lot of money, right? Yeah. So with futures, you don't have to. You can just take out maybe say 5% or 1%.
Usually 8-9% of the original price.
Yeah, that's right. Yeah. So I just need to take out a little bit. Correct. I can get the number that I'm looking at without putting in a lot of money. Yeah. Then what happened is that my main investment is still in the asset that I truly believe in. Yeah. And what happened is that every time, because the nature of futures is it's very tradable, you don't wait till it expire lah. You just see when the trend turn, you change your futures position again. You change your futures position again. So maybe every time it may swing by about say 10 lah. Let's say I say you're lousy lah. Every time you lose about 20% before you sell lah. You're talking about a small position, and within that small position you're losing 10 to 20%, which is irrelevant, or not say irrelevant, but a very small effect towards the larger portfolio because you already set aside a smaller amount for hedging.
Yeah. Maybe to give you guys a bit of context, if you are not familiar with futures, all this expiry date and all those things, right? When you're trading futures, you're actually trading a contract. You're not trading the asset. So the contract may say that you are allowed, if you hold this contract, you are eligible to buy, let's say, 100 gram of gold at X price. But this contract will expire on the 30th of September. So what you want to do is that if you want to keep yourself with that position over the long term, but your contract is only until 30th of September, right? What you need to do, like what Peter mentioned, is that by the 29th of September or maybe 30th of September, you sell the contract away because
Yep.
it's going to expire, right? You sell the contract away, but you buy another contract that gives you the eligibility from the 1st of October to the 31st of October. So they call this exercise a rollover.
Yep.
So if you want to have a long-term position in futures, you keep rolling lah. Keep
Yeah.
rolling.
So to give you guys an accurate example at this point,
Yeah.
what we can look at is like Frankie talked about gold futures and gold current spot price, right?
Yeah.
So assuming if I want to use gold to hedge against my portfolio of a US based currency asset, right? So I'm expecting USD to go down, so I'm
Yep.
expecting my asset to be devalued.
Correct.
So I decided that I want to hedge against that by buying some gold futures. Current gold spot price is 2,521 and 13 cent. Gold futures is 2,550.7. Yeah. The difference is
About $30.
yeah, not too significant.
Yeah.
Right. Now what happened is that it will say that assuming if my expiry date is 3 weeks down the road, right? So it means that in 3 weeks down the road, I can choose to buy gold at 2550.4.
Yep.
That will be the amount that I promised to buy.
Yep.
But because I don't plan to buy gold actually.
Yep.
So what I do is that when I hit near that day, right, by my second week, when I see the price of the gold future shoot up, let's say to 2580, I choose to sell first.
Yeah. You earn $30 first.
I earn $30 first. And I still get my hedging.
Yep.
Right? Now, if let's say what happened is that the US dollar go down, at least my portfolio still stable. I know I have this much. Right? So that is the whole idea and play behind using futures as a hedging tool for equity investment, which I thought was quite a brilliant way. I know there are many other ways, but I thought this is probably one of the most accessible ways for retail investors.
Yep. Actually, I myself also coming up with 3 episodes of futures related content. In fact, the first one is already out on FAQ show. This is also in collaboration with Affin Huang Investment Bank. And the 3 guests that I have interviewed, right, they are all powerful people in trading, right? There's this guy, the one that is out today, he invented a strategy called UFO. So apparently even professional traders in investment banks would buy his strategy and implement in their trading platform. So that's how powerful it is. One of my guests, he used the futures market to accurately predicted the 1997 and 2007 crisis, and he helped his boss to make a lot of money.
Wow.
Yeah, so stay tuned. The next 3 weeks, I have all of this juicy news on FAQ show.
That's right. So I guess that comes down to the end of today's episode.
Yes.
Yeah. Any last things that you want to share with people before we go into a quick time of Q&A where we'll pick out probably about 5 questions? Then we'll answer that, or 3 or 5 somewhere between there.
We can pick a couple
Any
of
last
questions
things first that you want to highlight?
Okay. The next few weeks is going to be very data heavy. All built all the way up to 17, 18 of September. So if you are interested in finding out all this economic related news and all that, just continue to read newspaper or subscribe to the coffee break.
Okay. So now, if you guys do not know, we actually own a couple of channels.
Yes.
Not just Mr. Money. Mr. Money is more of a general finance investing. Then we run this podcast together. But no, there may be chance of us splitting this into something heavier and something more lifestyle, and we'll see, right?
Yes.
Yeah. We have the FAQ show where it's more investment focused. We have Are We Okay? That is much more about current issues and policies. We also have a newsletter called the Coffee Break, which is a daily summary of news.
Yeah.
Right. So go and check out thecoffeebreak.co. Yeah. It's fun to read.
Yeah.
People, there's loyal readers. Yeah. Very often when I go out, when I tell them Coffee Break, I subscribe to it. It's fun to read. Right. Yeah, people enjoy it. There's a lot of puns there, a lot of sarcasm in the way he writes things. Yeah, which is very funny. Yeah. So it takes about 5 minutes for you to read finish, right?
Yes.
Yeah, but you become a lot smarter in just 5 minutes. Yep. Okay. So right now, let's answer some question.
Okay, let me answer this one first. What if the price drop? This is when we talk about just now your goal 2550 and then
Mm.
go up 2580 and then you take the $30 profit one. Okay, when we talk about hedging, generally speaking, the mindset that you must have is that you must always have two opposite trades. You will buy something and you will also sell something. The objective here is not to make money. The objective here is to keep your portfolio stable.
Mm.
Because when one go up, one go down, literally you will neutralize yourself, man.
That's right.
Yeah, but so in this case, when you have $30 profit from there, right, chances are you also need to be very careful with the other position, so that you need to do something very quickly there so that you can quickly close the position as well, so that you can keep this $30 profit as much as you can before it evaporates and become neutral.
Yep.
Yeah.
So the whole idea behind is actually think of it this way, right? Let's say you have a target that you want to achieve. Like my portfolio can never go below 30%.
Yep.
Yeah. Then this is what you do. But if let's say you don't have that, you don't mind it dropping by 90%, then you don't have to hedge.
Yeah.
Yeah. Okay. Any other questions? There's one question here. What are your thoughts on this year's budget? Yeah. What do you think?
Sorry, where's the question?
What are your thoughts on this year's budget?
Oh, Malaysia budget.
I wish I know lah actually.
Yeah, I wish I know. Then
Yeah.
I can tell you guys more.
But I would say that this year chances are what we are seeing is that is a lot more okay. What we are seeing in terms of the current issues right now, we can see that there's a lot going on in the business world. But I can see that at the same time, our prime minister is trying to show the rakyat that he cares for the forgotten as well. So maybe under the budget, there will be a lot more highlight to convince the grassroots to say that like, hey, you're not forgotten. Because when you talk about all these FDI, what about the people, right? And then recently also he came out with this it's kind of like similar to the new economic plan kind of thing. I can't remember what's the name of that thing, but probably gonna cover it a little bit under Are We Okay?
I think the government could also do more on the SME space. This new government seems to be very friendly to small businesses.
Yep.
But really, what is it going to come out? I really don't know. We need to wait one more month.
Yeah, we'll have to see. We'll have to see. Yeah. Okay. I think another one more thing is about YTL and MACC. Do you have anything to say about that? Because I did not follow the news on this.
It has to do with Muhyiddin and all that. I think we shouldn't speculate too much. If anything, we should let Are We Okay to do it. Shouldn't be on this show.
Right.
Different channel.
Now you push back the ball.
Push back the ball to Are We Okay.
Okay. Yeah. Anyway, under Are We Okay, he shared some very interesting things today. Go and stay tuned to Are We Okay.
Yep.
Yeah. Now, tell us more about family office. I think let's take this as the last question, right?
Okay, sure.
Tell us more about family office. You want to share with people, because I think you have experience dealing with PE funds.
PE fund, hedge fund,
family office.
Family office, not so much, but
probably were the LPs.
Correct. So basically, it's like this, right? So let's say you live in a big family, and this family is very rich. So rich that you all don't know how to manage the money one, right? Because it's just infinity.
Or too much.
So
you're too busy.
So it's like infinity, right, in your eye. So what you would do is to hire professional fund managers. And the job of these professional fund managers, instead of investing public funds, it's his or her only job is only one, is to manage your family money. This kind of fund manager is called a family office fund manager.
Yep.
So basically, it's the same as any other fund manager. It's just that their mandate is very niche and very catered towards what the family needs.
So you are the mandate.
Yeah, you are the man. You set the rules.
Investment committee.
Yeah, you set the rules for the fund manager.
Yeah.
So sometimes it can be a little bit more agile. You can change things faster because you just need the akong to say okay, then okay already. But sometimes it can be very troublesome also because the uncle say yes, then the auntie say don't want.
Yeah.
So a lot more politics sometimes happen in family offices.
So put it this way, family office is something that you will only start looking at it when you have above 50 million, I would say. When you have 10 million also, you won't really look at family office.
Yeah,
You look at
because
shared family
the
office.
fee is also quite
Yeah.
expensive.
Even 100 million also,
Yeah.
people are shared family office.
Mm.
You are talking about like a lot.
Yeah.
Like, and these people, probably you don't know how rich they really are.
Mm.
Kind of a lot. Yeah, then you see family office. It's a whole different level altogether. And it doesn't mean that they're investing in stocks alone. They'll be investing in all sorts of stuff.
Yeah.
From
As long as
PE
the
fund.
family say okay, they will go.
That's right. That's right. They may invest in Rolex. They may invest in paper
Yep.
also can, whatever lah. Right? Yeah. So that's family office. So it's I hope some of you here who are watching actually can establish a family office, or maybe some of you memang own your own family office.
Mm.
But yeah, that's basically the thing, right? Yeah. So that's all about it.
Yeah,
There's
the
one
last
question
one.
from Mavis.
Yes.
Mm.
Good to know Mr. Money has new channel. Congratulations. Can put the comments, the name, link of all channel. Do you have podcast for this channel?
Yes, we
Yeah.
do. Yeah, we do. I
Yeah,
think
so
Frankie has started to upload your episodes up as podcasts, is it?
yes. So all the content that you see on YouTube are also uploaded on Spotify as podcasts. So if you don't like to see my face, you can just listen
Yeah.
to me.
Actually, I should start uploading all my interviews as podcasts as well.
Yeah.
Yeah, I
can.
think that'll be.
So people jogging also can listen
Yeah,
to
that's
you.
right. That's right.
Mm.
Yeah.
So okay, anyway, we have Mr. Money TV, our main channel. We have FAQ show where I'm the host. We also have Are We Okay? And then apart from that, we have a newsletter called The Coffee Break. Actually, Mr. Money TV also has its own website, www.mrmoneytv.com. If you go to that website, you can read some articles that our team put up. You can also subscribe to our newsletter where every Monday and Wednesday, Peter will share his thoughts about personal finance, his ideas and stuff like that. And every Friday, I will also write something to talk about the market. And tomorrow is Friday.
Yes.
So, and I've already written something to be posted tomorrow. So be sure to subscribe from mrmoneytv.com to get my newsletter for tomorrow.
All right. So while our staff actually gonna write down the name of all the channels in the comment, and put up the link there. Maybe what we can do is that let's just close today's episode, right? Now, is there anything that you want people to take note of, or I'll start off first?
Yeah, you start first.
Okay. So I just want to highlight that when it comes to investing, sometimes for most people it's much more emotional than it is number based. Yeah, like for example, in this case where Fed rate goes down, it is something that everyone expect it to happen, and the Fed rate can only go down when the market is slowing down or the economy is slowing down. But people behave like as if it's a big surprise. You get what I mean, right?
Yeah.
So people are just weird. I'll just put it this way, right? And sometimes the media sensationalize it to make you respond in certain ways because that's clickbaity and that helps to drive the traffic. So my personal opinion to all of you out there is, as you are investing, you need to be able to differentiate between noises, distracting noises, and real information that matters, right? Now, like we have mentioned earlier, like understanding like when do you take profit, those kind of things, those are more numbers driven, right? It may not every single time when the market go down it is due to some fundamental issue. Very often it's very sentimental driven.
Yep.
Right? So be very careful with the way you invest, and the best approach is take a long-term position, diversify, and stay invested for 3 years, right?
Yep.
Because after 3 years you will really see the numbers. Like in my case, I bought Nvidia since 2002, 2022. No. Quite long already. Yeah.
I don't know when you started. So.
Yeah, quite long already. Yeah, quite long already. 2021, 2022.
Right.
But not a lot lah. It was like
not a lot because
$1,000 USD.
Because they share split.
Correct. So then so am I bothered whether Nvidia go up or down?
Doesn't matter.
I don't care.
Yeah.
Right?
So good.
Yeah. The only thing is that I didn't buy more lah.
Right.
Yeah.
Okay, so just now you mentioned that sometimes the market don't react towards fundamental, and then sometimes sentiment takes over, right? So we also discussed just now one way to look at market sentiment. You can actually look it through from different asset classes. You can look it through gold, different kinds of commodities, because when certain fundamental change happen, all these commodities they will start to react. And one way to give you a very a good feel of the market sentiment of all these commodities, all these assets could be through the futures market. That is the reason why we work together with Affin Hwang Investment Bank in the next couple of episodes to try to help our audience to understand what is it really about and how can we use it to our benefit even if we choose not to trade futures for now. We want to learn a bit more first, be more familiar with the asset class, then only we think about what to do next. So I suppose the next few episodes will be very helpful for you guys to starts to look or expose yourself to something new. So hopefully you'll enjoy those episodes. Yeah.
All right. Thank you very much. We will
Uh-huh.
see you next week.
All right. Good night.